Hello and welcome to the status report overview of SKAGEN Global in October. Let's take a look at the highlights for the month. Global increased by 7.1% during October, outperforming its benchmark by 2.2% on a relative basis to narrow the gap year to date to 0.6%. 2 new companies were added to the portfolio and we exited from 4 others. We also reduced our position in 2 holdings and the fund now consists of 99 companies. The portfolio remains very attractively valued in absolute terms and relative to both the benchmark and the fund's historic average. Now let's take a look at the month's contributors and detractors. Samsung Electronics, the fund's largest holding, was the best contributor to absolute performance in October, with the shares up 17% in local currency. The South Korean company announced strong third quarter results, with semiconductors and smartphones driving a 26% increase in profits. The cash pile also remains healthy and should eventually be of benefit to shareholders. VimpelCom, the Russian telecom company, was the second best contributor. We reduced our position in October as the shares have done extremely well over the past few months. Aside from good fundamental results, some of the strong performance has been driven by its recent inclusion in the Nasdaq 100 index. On the negative side, LG Core, a 2% position in the fund, was the worst contributor, with its share price falling 5% in local currency. LG Electronics announced weak third quarter results, particularly within the handset division, due to competition and high marketing expenses. Now let's take a look at the companies that entered and exited the portfolio during October. China Communications Services is the largest Chinese telecom infrastructure service provider, which trades at an attractive valuation. We don't believe the current share price accurately reflects a healthy earnings outlook, as the company should see solid earnings growth from the expansion of 3G and 4G wireless telecom networks in China over the coming 5 years. Storebrand is among the most attractively valued life insurance companies in Europe. Transfers from guaranteed to non-guaranteed products, combined with cost-cutting and the scope for higher bond yields, should increase profitability. Our investment thesis is that Storebrand will earn its cost of capital within the next 2 years and reinstate dividends. Gjensidige was sold out of the portfolio as we believe the share price approached fair value and we found Storebrand more compelling. Exiting the portfolio, Vinda was sold in connection with the bid from SCA as we thought the offer price to be fair. Noble was sold out during October as we continue to prefer ENSCO, where we are more comfortable with its younger fleet, strong balance sheet and the management team's excellent operational track record. ENSCO also has greater potential for a higher dividend or share buybacks. TE Connectivity was sold for valuation reasons. Finally, a quick look at the fund's top 10 holdings, which together represent 32% of the portfolio, and we can see how attractive current valuations are. The companies trade at a weighted PE of 2013 of 7.9 times, which is at a considerable discount to the index, and we believe there to be around 30% upside based on current target prices. That's it for this month. Thank you very much for watching, and for more information please visit the SKAGEN Global section of the SKAGEN website.